Let's hear a little bit about like what's your framework, how you approach thinking about the world.
Yeah, I mean, my career, I've been a systematic investor for a couple of decades now, and in particular, a systematic macro investor. And so, when I think about how the world is working, I'm basically going back to sort of core cause effect relationships, understanding those cause effect relationships, and from there putting into context essentially all the things that are going on into what those normal relationships are, and then from there trying to predict what's going to happen and then compare that to what's priced into asset markets, and that obviously creates the opportunity for alpha or new opportunities. And really at the core of that is thinking about basically where we are in a cyclical dynamic at any point in time, which, business cycles, they come, they go up, they go down. Each one's a little different, but there's a lot of commonalities between those. And then putting that in the context of more secular dynamics like debt cycles, like, globalization, deglobalization, things like that, that sort of are underlying or underlying all of those sort of cyclical dynamics that we're seeing in a day-to-day basis. And so, when I look at the world today, it is in some ways feels very new and different than that many investors have experienced, which is, an inflationary business cycle in the context of, the end of the long-term debt cycle and in the context of a shift from globalization to deglobalization. But those sorts of dynamics, they've existed plenty of times in history, just not in our professional careers, most of our professional careers. And so when I'm thinking about what's going on, I'm thinking about turning my attention and thinking about those other previous cases where we saw this sort of confluence of events, where you saw an inflationary business cycle, where you saw, deglobalization dynamics, where you saw, geopolitical tensions, things like that. Obviously, the 70s are relevant, but there's also, a dash of the 2000 cycle in terms of the busting of a bubble. Our bubble in the last 15 years is more like an everything bubble. That was more a tech bubble. Some flavor of the 70s, and maybe a little bit of flavor of, back in the deglobalization dynamics that happened, after the First World War. So it's kind of see the combination of all of those different things happening at the same time. And, this cycle will be some combination of all of those things intersecting with each other and leading to what transpires.